Nearly every Dow component has suddenly gone green, except for Boeing. Apple maybe, too. Let's get to Bob Pisani. Bob?
Well, we've heard it before, very close to a deal. President Trump's tweet, obviously moving stocks into positive territory. It was sort of mixed there right at the open initially. Let me show you some of the sectors. Transports were a little bit weak. UPS had now turned positive. UPS had was down here. They had a price cut over at Morgan Stanley. Utilities flat. Banks have moved into positive territory. And energy is doing very, very well this week. No drop in energy, despite the fact that the Aramco deal is essentially sucking up all of the oxygen in the room around the energy debate here. And we finally did get some comments here. Saudi Aramco did come out up 4.5% again. We got the $2 trillion valuation that they were looking for. You got to hand it to them. Quite a feat to pull that off. We did get our first analyst commentary, Sanford Bernstein, the first one that I know about that at least put a rating on that. Their rating is an underperform here, saying too much too soon. Risks of corporate governance risks. Of course, the government owns 98%. Low dividend yield. It's about 4.4%. Exxon has 5% dividend yield, so they got a point about that. Saudi Aramco, there it is, $2 trillion. And as I keep pointing out, the entire market capitalization of every U.S. oil and gas stock is $1.1 trillion. You have almost twice as much in a single company as the entire energy sector of the S&P 500. Let's move on here. IPOs, we're reaching the end of it. A couple of interesting ones coming out here. This is a Chinese company that we're waiting for tomorrow, but essentially had the pricing terms cut almost in half overnight. This is a Chinese company, again, 26 million shares, $9 to $10. The prior range, 36 million to 12 to 14. So you see here, that's almost cut in half. This is backed heavily by SoftBank, so this is one of the reasons there's a lot of interest in it. But these Chinese IPOs have not had a good year at all. We've had 22 year-to-date here. In 2018, we had 35, so there's a noticeable drop here. The average return this year for China IPOs, down 18%. This isn't a year when the average IPO here is probably up close to 20%. On the year. So they're not working at all. There's a number of reasons why they're not working. If you take a look here, you can see what's going on here. We've had slowing growth in China. That's obviously a problem. Trade tensions. They've had poor performance overall. That begets selling here. And we've seen some tighter regulatory oversight here in the United States. NASDAQ has recently tightened some of the regulatory requirements for that as well here. What's going to happen here if this keeps up into 2020? A lot of these Chinese firms aren't going to come over here anymore. They're going to essentially try to raise money over in China. This may already be happening with Alibaba. Remember, a short while ago, they did a dual listing here. Now, they're listed in Hong Kong as well, fairly small amounts, but that may be an indication of what may be happening in the future. That stock moved up very nicely ever since that was announced, and that stock is sitting right near the highs for the year. But IPOs here in the U.S., plenty of demand for high-tech IPOs. Here's a unicorn going public here. Bill.com, automated billing platform here, 9.8 million shares at $22. Wait a minute, the price talk was 8.8, not 9.8, at 19 to 21. This not only is pricing above the range, it's pricing with more shares in it. Here's a success. So it's not the IPO market that's falling apart. Bottom line here is there's a lot of demand for this kind of IPO, the technology. Take a look at the IPO ETF, up 30% so far this year. It is outperforming, Carl, the S&P 500.